The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on Tiger Financial News Network's 10 a.m. to 11 a.m. slot. And that is, and also I do the opening call daily newsletter. So we've got the Tiger Technicians Hour right now, and we're looking at the Dow up 92. Now, this is going to be a really fascinating look. From the high of 36,952, I can talk about it now because we've got we've got 5 sessions to go, including today. So we've got the 25th, then we've got the 28th, 29th, 30th. Yeah, we've got 5 sessions to go. 5 sessions to go. And look at this monthly chart. Isn't that incredible? With all the bad news, with the inflation skyrocketing, with everything going on. But we've got to say the month is young. Anything can happen. But up until this very moment, look at this, the monthly chart, 36,009, let's call it 37,000 down to, let's call it 32,000, right? With all that's going on, and now we're back to 34,800, I must say, something's going on. You've got the MACD dipping negative, and the monthly chart, stochastics down under 80% and 76%. On balance, following the little blue line here, still very good. The 9 is way above the 14. That's the best thing you can see. But as I say, with 5 days to go, anything can happen. What if we close at 32,750? That is on Thursday at 4 o'clock. That is Thursday's the last day? Yep, Thursday at 4 o'clock. Well, we've managed not to break the low of last month. We've made a higher low, and intra-month, we've managed to get way into the body of last month's candle. But you will see the MACD pulling back a little bit more, and the stochastic will probably be at about 72%. And that's saying that there's certainly internal weakness that you can't dismiss. But what if we close anywhere around from here a little higher? And that's a lot. I mean, we've got today to finish the session on Friday. We've got weekend to go with who knows what the news is. Let's just imagine a best case scenario that we actually close somewhere in the 35,000 level. Well, this monthly chart is good, but look at the S&P. If that's the case, the S&P should go a little higher, and it's gone from 48.18 to 41.14, and it's come back to 45.27. In leg D in the daily chart, it's very good that it's done that, and the MACD is fabulous in the daily chart. Stochastics flat at 92%. That means that there's buying pressure continuing. That's all I need to look at. Flat stochastic in the 90% or higher area. Fabulous 90% or up to 97. You hardly ever see 98, so yeah, especially 99. We once saw that. It's so rare because you never get 100% in the stochastic. On balance volume is the thing that's warning me to say, don't get too excited here. Why don't you look at the some other things, which we'll do in a moment, but look at that monthly chart. A red candle, Chapman wave, this is the Roman candle from the high of January. February comes down, breaks the low, goes under the 14-period moving average. But that 9, look at the green 9. Oh, I was going to do that today. I will do that because a lot of people asked me. Some people said, we loved your overview last week for your subscribers to your opening call, but some friends of ours would like to look at it. Could you do that chart again? I'll do that chart in a moment. But what we're looking at here, and the weekly chart has got a leg B with the MACD still very weak. The histogram's improving, but it hasn't crossed positive. Stochastics very weak at 92%. But you remember, the middle one, from the daily on the left to the monthly on the right, that middle one, the weekly chart, the technicals of the weekly always take much longer to repair damage when there's a sharp sell-off, which there has been. So as it stands right now, this is a fabulous leg B in the weekly chart. but you have to put it into context of the technicals. The pink 9 hasn't crossed to go green above the 14-period moving average. There are a lot of negative things, but price action has been really good. Okay, so within that context, having already reached D in the buy mode, number one is I love when you go to a C way above the previous high. We are way below the previous D of 48.18 on the 4th of January in the S&P, but there's a good start. Now, when you're coming off a low, and we don't know if this is the low or a low, just one of the many lows, or is this the big one? Well, under all the conditions that we're looking at in the marketplace, I hate to say that this is the low, because that would imply every single time there's a dip, you've just got to be buying. And I don't see that, because if you look at the SMHs, and the SMHs were looking very poor up until yesterday's action when there was talk about NVIDIA and Intel coming together. I don't know if they're merging or they're just working together, whatever it is. So that was really good. But if you're looking at the monthly chart, that is a big decline from a peak F or maybe even a C1, C2 from the high that was made in the 318 area down to the low of 239, 238. So far, there's a lot of repair that needs to be done. And we needed follow through today. If today was big follow through, instead of being down $1.50 at 274.87, the SMHs, because remember, my theory for decades has been semiconductors lead us on the way up, and they confirm. Sometimes they get to a high earlier than the general market. Sometimes they don't even make that high, and that's usually a warning to say, be careful. They could start down, and we could have a really sharp pullback. We've seen that before. Most importantly, this is good repair work. The MACD is good. Stochastic's flat at 88%. That's good. On-balance volume is really quite poor in the daily. It's nicely above the 9-period moving average, which is nicely above the 14-period moving average. But really, until I see a big break into the 293 area, I'm just saying this is a great rebound. I don't think that's the low, and if it's not the low in the semiconductors, then we've got to be thinking maybe it's not the low in the general market. But let's just go one step at a time. So if you're looking at the QQQ, which is the NDX 100, I just needed to check something here, because when you got trend lines, sometimes they cover up a peak. So that was on the 22nd of March, 357.85. Next day was 357.65. Great. I love doing that, so that my eye said there's a good chance that we made a peak there. So this is now leg B to the upside. I needed to clarify that, and that's good. Getting to a B above a 200-period moving average is good when you've come down so sharply below, but it means this whole area at the 357 to 360 area could be a stalling area as that 200-period moving average becomes a magnet for the Qs. Let's just check out ARKK just for fun. We do not have Mark. That's interesting. No, let's type it in over here. B-A-R. What am I doing? ARKK, what a day. ARKK, yep, pulling back here, down at $2 at 64.40s. This is going to be very interesting. All right, there's a couple of things I want to do just on the way, looking at the other indices. MJ, which is the alternative harvest, ETF, cannabis sector. Talked about Monday, some legislation maybe beneficial, but it spiked up to 11.49 at 10.78. Only I'll be back in a moment. Basil Chapman, Tiger Conditions Hour, Dow's at 137.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. Let me just finish up here. We're looking at gold in a trading band. Excuse me. In a trading band, we're looking at a potential arch formation right here. There it is, arch formation. If it starts to break into the 1978 level to start a leg C at any point, that's going to be good. But I think that after that huge move up, some kind of consolidation is warranted. Trading at down 12 at 1950 right now. Silver's down 38 cents at 25.53. Also made a gray peak A and a gray peak B. That means it's under the previous high. I should change that because that should become a down arrow right there. It's in a sell mode, just trying to digest those gains in the daily. Weekly chart is still holding quite nicely, but you can see silver doesn't have as exceptional a chart as you would think after such a big move up. Gone back into the digestive phase. We're looking at high-grade copper. High-grade copper is down at 4.70, down 0.03. Also made that A and then a B, and then it's pulling back. Just digesting big gains. Crude oil, digesting big gains. Made a huge move up to 130.50 in the continuous contract. Oh, it's not the end of the month, but let's just see if it's changed the number. 129.17 now. So you remember this is a continuous contract, gets smoothed out with the high of the 7th of March, spectacular high. Made an Eiffel Tower straight up, straight down pattern, comes back down, tests the 92 area. Now it's bouncing up to the 116s and it's pulled back to 110. Starts to trade in the 106 or lower area and it says up, digestive phase could continue. Got to watch this real closely. Looking at the TBT, whoops, not the TLT. No, looking at the TLT first. Oh no, it didn't take out yesterday's low of 128.34. Today's low is 128.43. Just an eye blink away from going even lower. Look at the TNX, and I'm going to go to this in a moment, but just for the moment, I'm going to go to the chart that has the daily, weekly, and monthly. This is a leg E in the TNX. That is the yield. Unbelievable. Trading right now at 24.55. There's 2.55. 2.55. You almost had the 30-year at that at one point, right? And this is the weekly. Just look at that. The technicals are still good, 83% in the stochastic, and that monthly it's gone through the rectangle formation, it's gone to the upper band, and now the next level, I have to change this and say that this particular rectangle gets moved up, to there, and we're looking at, oh, goodness gracious me, we're looking at this monthly chart in a whopping, one of the biggest legs we've ever seen, and this is single leg, that's a monthly chart. Look at that move. It's gone for around about 1.73 to where we are right now at 2.453. That is incredible. That is the 10-year yield, 10-note yield. And that's where most of the loans are taken, auto loans, etc. And we're looking at the bonds down, made a new low, leg D to the downside in the daily chart, and it's broken. Oh no, I didn't expect it to do that so soon. I drew this in the other day. I said, look at this, got the Chapman wave inside track, propellant zone. It's going to soon become a repellent zone. We're under it. And this is just saying yields are going much, much higher. How can the Dow be up 196, the S&P up 13, when you've got all these negativities going on? Well, because in this market, which is so sector related, what you're looking at is, here's the Philadelphia Housing Sector Index, made a lowercase h that has gone to a lowercase m. It hasn't taken out the left side low yet. That was around about the 24th. And it's bouncing up and now coming back down. So it is impacting certain areas. And in this case, it's the housing sector. So what's really important is that in sectorization, what you're getting here is that, remember, since the summer of 2000, after we got that major buy signal and the diamonds went along the day of the low, 6th of March 2009, the Friday. Monday was the 9th, was the S&P low. That summer, when we were still holding the Dow diamonds, I said, let's watch to see if there's a correction that unfolds that becomes rotational, because what we've seen over the period from the low made in March of 2009 is that every smaller pullback has been rotational, and the stocks and sectors that were doing fantastically took a breather, and the ones that were doing poorly took the lead. And in other words, you had like the scales of justice. You constantly had this balance so that you didn't have everything like that. December to Christmas, what was it? Day after Christmas, 26th of December, 2020, whatever it was. I do this all the time and then ask me to actually name the date. Unlike Larry, I can't say Tuesday at 3:20. I was sitting next to Joe, and the futures were wheat was at 13.4. No, I'm sorry. So it was this. Oh, the big smash back in 2019, and that was one of the biggest moves down we've had. So when you're looking at the low that was made back in 2009, we had that whole sector rotation, that 2010 pullback, and then it went sideways, and then it broke out. So that's what we're looking at right now. Yes, there's potential for a World War III. Let's just kind of mention this casually. But at the same time, the stock market gets bored with the same news over and over. It'll pop up as influential at certain points. But mostly what we're looking at is the market then gets back to focusing on the market. And remember, I always say, if people say, market hates uncertainty, I say, every day it's uncertain. What it hates is uncertainty about uncertainty. And I think we're getting a little bit of clarification here. So the TLT is really important. That's a sector that's really important. Agriculture, our DBA, which is the DB fund, which subscribers have had for a long time, from the 13s, trading at 22.09 right now, up in a high-level consolidation. That's the agricultural sector. And if you look at even the agriculture, look at wheat. Wheat had the spectacular move to the upside to, well, now it's probably changed, but I'm calling it 1363.5 on the 8th of March, whatever the high was price. You had the Chapman wave Roman candle. You broke down, took out the wick, you went lower, and now we've gone sideways. And sideways at a high level is one thing, but off the top says the exacerbation, the aberrational move that spiked it emotionally to that high. Now we've settled down and other things are going on. So I wanted to get all that out the way, and now I'm going to go to this chart that a lot of people ask me about. Actually, a couple of quick questions I'll get to. Yes, let's do the XLF, and then I'll be free to talk about more nitty-gritty stuff. XLF is holding very well. It's up 39 cents at 39.41. Considering what the bonds have done and the yields have done, the XLF should be much, much higher. But now I've said for a little while, I'm excluding the inflation of yields. In other words, the higher yields. I think the financials are now working a little more independently. And to that regard, if you look at the Berkshire Hathaway, which is part of it's hard to believe, but it's part of the financials, up at an all-time high as we speak at 356, up 4.34. And yet, if you look at a JP Morgan has had a whopper of a move down from 169 down to the 125 area. Now it's trading at 142. So big diversity within the financial sector. I'll be back, and we're going to be looking at long-term charts. I'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So let me do a couple of things, and then we go to the long-term charts. We do have time. I'm running right on schedule today for a change for myself. It's my own schedule. So the question was on the short-term card. I just showed the E-mini. This is the ESM22. This is the June contract, S&P. The 10-minute chart. made a couple of moves, really fabulous moves, all the way from the low that was made at the 200-period exponential moving average. It was 11 o'clock yesterday, I believe it was. Yep. And then we ran up to a peak G. Unusual to go to a peak G, alternate count G, right there. And that was at about right at the close. And then we pulled back, go sideways, made a peak A, B, C, and then a D. Remember, D is a buy signal to a buy mode. You expect at least a D. Then it pulled back very sharp. There was a sudden move at about 4 o'clock this morning. When I looked at about 6 o'clock, I saw, oh, that's a big move down above the 200-period moving average. And it went to a peak A, B, C, D, E. And then I drew in the rectangle formation. And then what happened is it pulled back quite sharply underneath the support in the 10-minute. There's a 10-minute E-mini. And then it suddenly spiked. Now, the Chapman wave methodology says be conservative if there's any indication at all. Let me just make this now. You can see it a little bit closer up. So, oh, I didn't need to do that. Let me do this, and I'll make it smaller so we can see what we're looking at here. So, and in this particular instance, once I drew the rectangle, it says if it goes underneath, then you've got to see a brand new buy signal that can take it above the previous high. Otherwise, you're going to trade in the rectangle. Well, we popped above it. At this particular instance, I have to call it F/B. I did this quickly because someone asked me about it. So that's an A, right there, uppercase A, big gray A. And then it popped to a higher high. So if the MACD starts to cross positive, there's a chance that it can continue higher. So I have to call this F/B. I pick up the previous high because it didn't take out the starting point way down at 4,500. That's the start of it. If it takes that out, every count just gets, on the upside, gets negated, and you have to start fresh. So this is still in the running because the 9-period moving average just flipped back to positive. So I call this F/B, but it's trapped in this range. So that's the 10-minute chart. If you look at the 1-minute chart, so it's like going from a monthly, I'm skipping the weekly right now, the 5-minute, I'm going to the 1-minute chart. It made one peak D at about 9:55, pulls back, makes the cup formation, and breaks out to the upside and goes to a D. And look, the green 9-period moving average has been positive ever since and is still positive. So what I would do is, because it's taken time, I'd grab the outside, I'd draw in the rectangle, I'd then say, okay, I've got two fighting patterns. One is the arch formation, like that, and the other is the cup formation. And as long as it's holding strong, if I was long and holding long, I'd hold until it breaks to the 9 goes under the 14, changes to pink. And in the meantime, it's still positive. The MACD's okay. The 9, the stochastic's running from 67%, not great, but look how nicely the unbalanced volume is. That's a really good sign, and it's moving up towards the upper range. So I did that. The next question was Starbucks. It was Starbucks, right? Yes, Starbucks, please. SBUX. Starbucks is trying to come off the low that was made. I happen not to like Starbucks action at all. I've said that for ages. I've said, first of all, maybe once or twice I bought something at Starbucks, probably not coffee. But look at this. It's gone from an all-time high of 126.32 in July of last year. It's just this month, you can see the 9 is crossed under the 14 period and is trading from the low it was made at about 78.50, or what was that, 78.92 on the 14th of March, went straight up to a peak A, gapped up, and now it's just stalled. I don't know whether you're long or you're short, but if you are short, I would say if it's starting to make some kind of a base, but it actually is acting terribly. And all I can say is that I would be remaining short, but what I would do is if it popped to the 90.50 area, I take a little bit off. Maybe I take even a little bit more than a little bit off. But if it took out, if it closed underneath 84.98, the low of the 18th, it'll fill that gap and probably make a lower low. It actually looks like the bond chart. It just doesn't look good at all. So would I buy it? I wouldn't touch it on the long side. The chart says there are too many problems with Starbucks. I don't know what they are, since I'm not a Starbucks. There you are. I'm not a Starbucks aficionado, and that's all I can say. So I hope that helped you. All right, now could you please review? I did that. Yeah, if you pop out the charts, you've got, I believe Jacob could help you in the den. Just ask him about that. Okay, a couple of questions. I just want to see if I've got the questions. Yes. Okay, got that. Okay. Oh, fighting union. Oh, yeah, not only that, I forgot all about it. It's got this whole union going on, the union thing. Would I look at VZ? Let's just do VZ quickly. VZ. Now this, what I said to subscribers a long time ago, I said, I didn't know, this was months ago, I said, I don't know about the oil, multinational oils. They might be a better play for a dividend and a capital gain play, but I'm really nervous about the media communications area. That means Verizon, that means Comcast, which was acting at the time really well. Now it's way lower. I don't think this is the place to be. And didn't I hear yesterday something about Google? Was it Google? Oh, Apple. Is it Apple or Google coming out with the telecommunications? Oh, I think the pressure is going to be immense. I mean, I'm thinking I'm going to cut back a ton on all these different things that I have. I have backups of this, and I have Verizon, I have Comcast, you name it. But all I can say is that the choices now to save money, it's just so great. I said as a business, I just need the security that I'm always online. And Comcast, I must say, has been really good. But it's all of these are way more expensive than they should be. The competition, my daughter yells and said, join us. She said, for $25, I know she pays 30. I don't know what she pays. The number, it's probably the taxes I pay that she pays for the whole thing. So yeah, there are a lot of choices. All right, enough. Now let's go to what I wanted to show you. First of all, I'm showing you the chart here. That's not what I want to speak on tomorrow for my or I think it'll be Sunday. On Sunday, I'll be doing my overview for my subscribers, my video. Look, we broke out. This is a leg C. I'm calling it not an alternate count. I'm calling it a leg C now in the yields. In the weekly chart, this is the 30-year. Look at this, the 5 over the, oh, man. The 2601, is that a 5 or a 6? 2501 in the 5-year and 2467 in the 10-year. The 5 is over. Talking about flattening of the yield curve. Yike. So you've got the global timber and forestry ETF stuck in that rectangle. Now it's pulling back from the upper range. And you've got finally the Philadelphia housing sector weekly is pulling, hasn't broken down yet, but it's underneath the support. I didn't want to do that chart. This is the chart that I was asked about. Could I do it? Yes. So this is my very long term now. I'm not a big fan of using black background charts, and that's why about 15 years ago or more, I changed from my black background to, I made everything white. I do have black background for some things. I just find them hard to see. So all I'm saying is it's better for it to be hard to see right now, because you see this green line right there? That's the 9 EMA, which is still positive in the monthly chart of the S&P. I'll talk.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So let me just mention, I don't know if I even finished the thought on Verizon. So VZ at 51.33, I think it's just stuck. If it closes under 50 at any point, that's a real big test, because it's going to test that low that was made back in 2021. Was that November? December, the week of the 17th, 52.06. That gets taken out. Then it goes all the way down to the low that was made in March of 2020, 48.84. So it needs very quickly to move over the 9-period moving average of 51 to the 51s into the 52.50 area, and then I'll say, you know what, it's stabilizing, but I don't think this is a long-term buy. I think it's more just stepping aside and watching it. All right, a couple of things just as I'm about to go. I want to finish this because as we're talking, the Dow did go above. It started leg D. We've been long since this was at 330.75 the diamonds. So that's about 33,000, just under, actually it turned out to be just under 33,000 on the 15th of March. We're taking a tad off once, and we're taking a tad off today as it went past peak C, and we're still holding the long position. This is absolutely imperative that this rally does not, by Tuesday or Wednesday, close under 34,200, and we're at 34,935. Anytime next week, in fact, it mustn't close under that. All right, now I can show you these charts. Within the context, and now just when we look at Tiger TV, I want to see how this comes out, and then I can talk to the issue in terms of overall viewership. Yeah, so what we're looking at is from this green line right here, that was the last big buy, the February of 2010, at around about the, let's call it 1100 area. Okay, yeah, you can see it. All right, let me just say that you can see this is all green right here. I've only got gray bars. I don't have candlesticks here. I don't need that because to show a different thing. And what I'd said was there's a really good chance, and this I discussed this briefly at some point much earlier on. I said, does this is from last week, but I had already done a lot of the work some time ago. And what I'd said was, does this September 1998 at 1190 SPX down minus 22% correction match with now? That's February of 2022. Now remember, this was done last weekend, before the spectacular week that we just had. And what I was saying was, there is a chance, based on my analysis of the MACD and the stochastic, and the MACD and the then, and the MACD and stochastic now, because what I was looking for was a very large. Now, for those of you who know anything about automobile racing from the ages, there's a track. I'm not even sure it's still in existence, called Le Mans. And it is a track that has this huge, it's not really like a hairpin, but it looks like a hairpin, but it's a huge move to the one side and then a reversal, a really sharp reversal. And I always think of this as the Le Mans. So this is what we had here. You didn't get the same thing in other tops. And even this top here that was made back in 2018, before that very sharp move down, had an M-shaped pattern. So we're looking at this as a potential M-shaped pattern that can last. And if everything works out, there's a rally that if it takes out the previous high, I mean, the ifs that I'm talking about are not just uppercase Fs, but if you've got neon lights and you know the sign down at Kenmore Square here in Boston, what is it? What the Kenmore Square sign, I should know it. I used to live near there. But whatever the big sign is, that's a chevron or something. I can't remember right now. It's that big. It's a huge, huge sign. And it says, if we take out the highs that were made, in other words, the January highs that were made in the market, this most recent high, all-time high, then we could be looking at a rally that goes higher. I'm not saying how high. I'm just saying if we either test it and break to the upside, that's important. All I'm doing is trying to identify technical patterns that match. And look, the 9-period moving average then, even though it dropped sharply below, held steady as a rock, stayed green, and was green from the low that was made back in January of 1991. It never changed color until February of 2001. It's after the top that was made March of 2000. Remember, the Dow made its high in January 14th, I think it was, of 2000. And then the SMHs, semiconductors, and the S&P went higher. And what's really important is that it took the S&P a long time to double top and then crunch down for that 52% or whatever it is correction. So what we're looking at here is that there's a chance that if this green line, now let's go to the one we're looking at. Remember, this is the one that I said has a chance. In fact, let me make this even better. I'm going to make it space to the right. I'll give it I love spaces to the right because it gives you a sense of imagination, what you think can happen. If it just stopped right here, I like space. So the space says, let's see what happens in this space over here over a period of a year. Well, green, we've plummeted from there to there in almost an equal move from the 9-period moving average. The MACD has just gone barely negative. The stochastic's much weaker. It is at 79%. Is that 79? Yep, 79%. The on-balance were holding beautifully. The on-balance volume in those days, let me just move to the right. Maybe I'll just use this. There we are, moving to the left, actually, of the slider. And there it is. Look, and the on-balance volume was at a high, but then it went even higher to the major top. So all I'm saying is I'm not being over-romantic about this. I'm not being Pollyannish. I'm just saying there are we've looked at, remember, for those subscribers that have been with me a long time, for years and years we've been looking at a chart that I never told you what the template was. The template was, I can't do it now, but the template was going to the 1929 top, and we were looking at a weekly chart, and I said this weekly chart looks like this other chart, and it's matching, and it did it perfectly until fairly recently, and then there was a big change, and I said, okay, we're done with that. Now I've got this new template, and the template says, as long as we're matching, is there even under these conditions, is it even with crude oil at multi-year highs, with wheat and with the whole Ukrainian, the breadbasket of Europe under tremendous, tremendous pressure militarily, But we're not even talking about the farmers. How are they going to get the crops to wherever it is that they have to go? Are the ships, what is happening there? So I'm just saying that there's a chance that this is the template I'm looking at. I don't want to be Pollyannish. I can just tell you right now that if we break down, the Dow loses 2,500 points in the next 6 weeks, this template kind of fits me. Fascinating.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. As we're about to finish the show, let me just do this color pink. So we've done the one-to-one in the Chapman Wave falling exclamation. We've done almost that. We haven't done the one-to-one. That would take us. Remember, the measured move that I was looking at was to 34,970 to 35,050. Today's high so far is 34,942. But the measured move from the Chapman Wave inside track repellent zone, the breakout, says that the chances are that if this continues, 35,150 would be the next move up. I don't want to get carried away. All I'm saying is that we're above the 200-period moving average. The buy mode has worked. It did exactly what we've been talking about all week. We've gone to the leg D, gone to the leg D in the Dow, we've gone to leg D in the S&P. Those are the two metrics that we were looking for. If it consolidates now, at least it's achieved what we wanted. We'll go step by step. Most importantly, what I want you to do is I want you to at least demonstrate some of the Sitko sign. Thank you very much, Sitko sign. I forgot about the Kenmore Square. I want you to demonstrate some of the techniques and some of the templates that I'm trying to use here to get away from the nitty-gritties of the news media, and to look at the charts and say, well, if such and such happens, and for this to work, you know, we're at 34,900. We've got 2,000 points to go to get back to the previous high, the all-time high. That is a lot of expectations. So let's just go one step at a time. So far, fabulous action in certain sectors, and that's really what's important for subscribers. I know that yesterday, I had something that I featured. I was like a day late. I did it, and intraday it moved huge. And today, same thing. You're about to buy something, and by the time I was about to send out the for some reason it skyrocketed to the upside. I said, "You're gonna wait. Thank you for waiting." There's a big up 50% now the next day. Got to be very careful here. Have a wonderful weekend, everyone. Got a great program. Back to the news, and then I'm out. Thank you.